Folks, you better buckle up because this is going to be quite the video and one that you absolutely need to watch before the events happening on Monday. If you are a GameStop holder, trader, lover, hater, conscientious observer, or even short seller, this is going to be the video for you. We are going to be covering 5 things. Number 1, the latest information on Roaring Kitty's position. Number 2, the cash position of GME and how that completely destroys the short seller narrative and what they may soon be doing with said capital. Number 3, how the shareholder meeting delay that was supposed to happen on Thursday and now is going to happen on Monday might be very symbolic and what we should be expecting on said meeting. Number 4, we're going to discuss the latest volume trends we are seeing and what they tell us could be happening next, how a powder keg is brewing beneath the surface, and lastly, we're going to talk about how the point of max pain for option sellers is getting higher, why that is, and the gamma ramp that is happening behind the scenes on the options chain. We'll talk about what's going on and what it all means. And as always, if you're the one taking the risk, you got to be the one doing the ultimate frisk. You must do your own due diligence on all ideas presented here on the channel. Let's get to work. Timestamps down below, and today's video is brought to you by the lovely Kitty 50 sale on ZipTrader options. That coupon code will be expiring on Sunday night, so if you'd like to join our program and get our step-by-step lessons, private chat, and our options alerts, I'll put the link to that down below. I think our GME calls that we've alerted are going to heat up a lot this coming week, so you might want to get in on the team. Okay, so I want to start with Roaring Kitty's latest position. So Roaring Kitty posted on June 10th that he had 5 million shares and 120,000 call options and about 29.4 million in cash. Now his latest update shows that he turned that into 9 million shares, a little bit more than 9 million shares and 6.3 million in cash. How did he do this? Well, presumably he sold some of his options and exercised some of his options, and that jumped him from 5 million to 9 million shares, and that's quite the jump. And keep in mind, this is a guy that had about $1 billion in a total GME position, and overall he basically turned down that $1 billion and said, nah, I'll take the shares. I'm just chilling. If that isn't somebody who believes in his thesis, I don't know what is. You look at the top institutional holders, this puts Roaring Kitty right above State Street and only behind BlackRock and Vanguard. But of course, Mr. Kitty, he's no institutional investor. He's just a guy who says he likes the stock. But what is Roaring Kitty's endgame here with his position? Well, if you look at the trends of his disclosures, it seems pretty clear what he is doing and what his strategy is. In fact, on September 16th, 2020, when he posted his position, at that time he owned only 10,000 shares of GME and had various strike call options expiring at several different dates, Q4 2020 and Q1 through 2 of 2021. And as you look at his disclosures and the trend there, you could see that the buying call option strategy and exercising to buy up more of the float strategy has been what he has been doing, and it's been incredibly successful for him. By March 2021, he had disclosed that he had 10x the number of shares in his position and once again had bought more call options, which presumably were later used to buy up more and more shares if you look at the overall trend. So Roaring Kitty's strategy seems to be very, very simple, and it's been a strategy he's been employing for years. He first starts by buying call options, and as the stock price goes up, he exercises said call options, he owns more shares, and then he rinses and repeats, once again going and buying call options. Now, presumably, some of the times he's done this, it hasn't been very profitable, but overall it's been working so well for him that he's been able to exponentially grow his position, and that's how he's been able to go from a $50,000 position to what was $1 billion at highs, and how he now has some 9 million shares. So then that begs the question, what exactly is he going to do next? Well, if you look at his step-by-step strategy, well, what he's going to do next is likely buy more call options. And if history is a judge, well, he usually goes 4 to 6 months out with his call option positions. And so I'd say fat chance he's buying December calls, maybe a mix of quicker to expiration calls dating out to the end of the summer, since momentum is pretty hot right now too. Okay, next, let's go ahead and talk about the cash position of GME and how that completely destroys the short seller narrative. So here is the dealio. We know that GameStop just completed 2 offerings, the 45 million shares they did in May and the 75 million shares they just finished more recently. But how much capital did they actually raise? Well, if you look at their SEC filing, they raised $933.4 million from their first offering and $2.137 billion from their second, totaling just over $3.1 billion in cash raised. Now, we know that at the last report, GME had just under $1 billion of cash on their balance sheet, which means now they likely have about $4.1 billion in just cash, give or take. But don't forget, they've also got $83 million in treasuries, $58.9 million in receivables owed to them, $600 $675 million in merchandise inventories, and so on and so forth. So overall, I mean, they had about $2.587 billion, give or take, in assets before this offering. Now they have another $3.1 billion. You add those numbers together, you subtract the liabilities, you're looking at somewhere around $4.4 billion in total assets. And you look at the market cap at the time of shooting this video, it's at about $10 billion. That means that depending on the day's trading, somewhere around 1/3 to 1/2 of GME's market cap is in straight up cash. That's very, very unusual for any company, let alone a company that has some of the highest short interest in history. You tend to short a stock when you believe they're going to go towards bankruptcy, but it's very, very difficult for a company with almost half of their market cap in straight up cash to go bankrupt unless they have huge bills. But this is a company that doesn't have huge bills. I mean, this is a company that can afford to lose money for many, 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 many years and still not go bankrupt. And yes, I know short sellers will disagree with me. They'll say, okay, but GameStop is literally suffocating under mountains of money. GameStop is accumulating billions in reverse debt. Reverse debt, Charlie, how can that not be scary? The short sellers will say, look, GameStop is being reckless. They're keeping too much cash on their balance sheet. They should be using a growth strategy. You must sell the stock now before it goes bankrupt. But here's the thing, folks. This cash is not just about buying GameStop endless time. It's an opportunity for them to completely change and supercharge their business. At minimum, GameStop can put this cash in just treasuries. It's a very simple thing to do, and they'll get $240 million per year, somewhere around $240 million per year. Even if their core operations operate at a loss of, say, $50 million a quarter, they could still net a profit. Net loss for the last quarter was just $32 million, and I mean, the first quarter of every year seems to be a little bit slow for the stop of game. So there's a lot of margin for error here. That's the point. But at the same time, GameStop can do far, far better if it becomes a strategic acquisition company. There's a lot of speculation that Ryan Cohen might take GameStop the way of Warren Buffett's famous Berkshire Hathaway. Berkey McBurk was once a textile maker that then ventured into investing in a tons of other businesses and diversifying and became one of the best performing tickers of all time. GameStop can easily push towards that direction. It's got so much capital, it could easily start acquiring some small but profitable businesses and change the overall picture. Okay, moving on. So the much anticipated Thursday shareholder meeting was delayed, as you likely noticed. It was first scheduled for Thursday, then pushed to Friday, and now it's pushed to Monday. They said this was because of unprecedented demand from shareholders seeking to access the meeting, and they updated the time to 11:30 a.m. Central Standard Time on June 17th, which again is on Monday. Now, we need to cross into deep speculation territory here to really analyze some reasoning and potential ideas for why they might just have moved it to June 17th. There may be some symbolic reasons for it, or maybe just coincidences, but I'm going to go ahead with symbolic reasons. Now, you got to remember that the biggest speculation is that at this meeting, Roaring Kitty will be announced as a potential board member nominee or some form of insider affiliate, and that is becoming a strong possibility given he does have a huge stake in the company. Roaring Kitty himself tweeted the suggestive picture from the TV show The Office. It's of character Michael Scott with a kitty in his pocket shaking hands with his boss who has the GME logo on him. Now, this tweet gets a little bit more interesting when you think about how June 17th is National Take Your Cat to Work Day. And to be honest, I mean, this is the first I'm hearing about Take Your Cat to Work Day, and I'm not aware that this is actually a thing people do. I heard about this and I was thinking, you gotta be kidding me. This sounds too perfect. Oh man, I really don't have much of a comedy career ahead of me. However, that aside, bring your cat to work day and Kitty tweeting a picture of Michael Scott bringing Kitty to work and shaking GameStop's hand seems pretty on the nose. So we'll see what happens Monday. I don't know if this is a coincidence. Could this be a nothing burger? Sure. But I'd say, as with most things with GameStop, there's got to be something else going on beneath the surface here. Now, let's talk about the volume trends we are seeing and what exactly they tell us. Volume right now shows GameStop is like a powder keg about to blow. How do we know this? Well, remember, volume is the amount of shares trading in a day. If you look at the volume on the chart, you could see that volume in June has been averaging higher than the volume in May, which means the battle, in a sense, is far more active now than it was last month. And remember, not all volume is equal. It's not so simple to say that more volume is better or less volume is worse. There are other variables to volume, such as the proportion of said volume that is upward sentiment versus downward sentiment. Then there's the time of day when the volume is applied. If upward sentiment volume is applied during a period of low liquidity, the price can skyrocket a lot faster, and vice versa. The volume it took to spike to 80 back in May is much less than it would take now, because simply there was less liquidity then. It was much, much, much bigger of a surprise back then, and all of that big demand coming out of nowhere after years of not much demand was very, very unexpected. So the underlying market makers had no time to prepare, and a lot of that happened in extended hours trading where liquidity is low anyways. Today, obviously, there's much more volume going back and forth as well as more shares out there, but nonetheless, if you see any stock and it has an overall upward trend at the same time where the volume is on a stair step upward, it does tend to suggest more momentum is coming, and volume right now shows GameStop is like a powder keg about to blow. The next breakout of volume will likely take us higher than early June heights, and that will light said keg. So I would keep an eye on that volume because you would be surprised what happens if this picks up meaningfully this coming week or the week after. Okay, lastly, I want to take you over to the options chain and show you what's going on here. Now, if you want to predict movements in an underlying stock, you need to understand options. A lot of people kind of tune themselves out from the options world, but you just can't do that if you're trading, especially some of these very, very popular stocks where lots of people and lots of volume does flow to the options. I know options are a dirty word in the Reddit community because people just like to buy the stock, but clearly, as Roaring Kitty has demonstrated, options could be a great way to make money and or acquire more shares if that is your goal. And not only that, but they are a very important underlying motivator of a stock's trading. If you look at the max pain for GME, it's been trending up pretty consistently. Now, what exactly is max pain, Charlito? Well, max pain refers to the price level at which the largest number of options, both calls and puts, will expire worthless. This is the price level that causes the most financial loss to options holders and the least financial loss to options riders. Of course, the riders are the sellers. Now, why does this matter? Well, it can be the case that stock prices tend to gravitate towards the max pain point as the expiration date approaches. This is thought to be because options riders, the sellers who generally want options to expire worthless, may seek to influence the price, especially if they are big market influences behind the scene. If it's a big money rider, well, all of a sudden what happens? Well, they have the power to push something down or push something up should that be needed. And so in a way, that means the max pain point can act as a key level of support. If max pain, for example, is at $27.50, which it's at right now, that means that you have a very, very critical key support level there. And as time goes on, the key level of max pain has gotten higher and higher and higher very, very consistently, meaning the springboard for bouncing, the support level for bouncing has gotten higher and higher and higher consistently and more consistently, which is very, very key to know heading into this week. If that continues to get higher, well, you can expect higher and higher bouncing levels. Now, there's another angle to this, which is the gamma ramp. What is a gamma ramp? Well, a gamma ramp is simply a ramp of gamma. Goodbye, that's it for today. You're welcome for that great explanation. But seriously, a gamma ramp happens when there's a ton of money going into higher and higher strike calls, and it's a sign that more short sellers are worried the price is going to be higher and need to hedge, and or more people are speculating that the stock is going to go higher and want to benefit from said contract appreciation. Now, when you see a gamma ramp, it also tends to mean that market makers selling the contracts need to hedge more themselves, and oftentimes they do this by what? By buying shares, which can cause a bigger, more full, self-fulfilling prophecy that cause stock prices to go up even further. And right now we are seeing a huge ramping ahead of the June 21st expiry calls. We have about 6 days until those expire, yet you can see open interest expanding meaningfully at strike 125, which are indeed lotto levels, but a host of other more likely to hit strike prices are starting to see some volume flow into them as well, some increased open interest, which suggests at the very least there's an increase in people expecting a huge pop next week. But still, I think even more importantly, the ones dating out past June into July are also seeing an open interest change as well, with strikes 100, 125, 50, 120, and 20 seeing some of the biggest increases in open interest. Now, people don't usually demand contracts with high strikes unless they suddenly think the underlying is going to be much more likely to move upward, and so that's what you have to keep in mind heading into this week. There's more and more people expecting a bigger and bigger move to the upside. Anyways, folks, that caps off today's video. What is your thought process on GME heading into this week? Do you see a big uptick coming, or are we at the end of the road? Are we going to see stagnation, or are we going to see a sell-off? Let us know what your thought process is down below and why. And we appreciate each and every single one of you. Make sure to take advantage of that Kitty50 coupon code on ZipTrader Options to get 50% off, and that expires Sunday night. You'll get our step-by-step lessons, private chat, and our options alerts. We send out a lot of different options alerts with very, very well broken down reasons for them and very top tier research, and we'd love to have you on the team. Anyways, have a good one, folks, and we'll see you in the next video.